Hello, you're joining us again in the weekend edition of Into Vietnam with the most outstanding business news and expert ideas on the economy in the week. It's standing between April the 14th and the 18th. And here are the headlines. Vietnam collects 53 trillion dong worth of taxes in the first quarter. Russian Foreign Minister visits Vietnam, aiming to boost the two countries' cooperation in multi-fields. The current non-performing loan ratio, the problems in the real estate market, as well as the market recovery trend in the upcoming time will be the theme for this week's business talk. It's joined by Mr. Ash Shourie, the Managing Director of Cushman & Wakefield. First of all, let's begin with this week's figures. The General Department of Vietnam Customs estimated to have collected a total of 52.23 trillion dong, or $2.52 billion worth of import-export duties in the first quarter of this year, making a year-on-year increase of 30.7%. The first 3 months of the year's figure fulfills 23.8% of the whole year target. The tax collection generated by its 11 large units hit 47.68 trillion dong, accounting for 89.6% of the whole sector's tax collections, up 26% on year and meeting 23% of the year plan. In the period, Vietnam's total import-export turnovers reached $65.99 billion, up 13.8% on year, including $33.54 billion worth of exports, up 14.8% on year, and $32.45 billion worth of imports, up 12.8% on year.
The Ministry of Industry and Trade has passed a package of 25.21 million Vietnam dongs, or about $1.2 million for the second phase for the National Trade Promotion Program in 2014. The credits will assist trade promotion activities to develop market, export products, and trade information in both domestic and foreign markets, heighten competence for enterprises, and bring made-in-Vietnam products to urban, mountainous, and border areas. Trade promotion activities will focus on organizing expos to effective promising sectors such as food processing, agricultural and agricultural products to boost traditional and potential markets such as the US, Republic of Korea, Japan, China, and new ones in the Western Asia and Africa. Specifically, the program supports 6 regional fairs and 128 projects which bring Vietnamese products to remote areas. Earlier, the previous National Promotion Program in 2013 attracted over 6,000 enterprises with 572 signed contracts worth over $1.4 million and over 1.8 million of visitors.
The Ho Chi Minh City People's Committee, the State Bank of Vietnam's branch, and 8 commercial banks have joined hands in credit contracts with businesses operating in the city to disburse 8.3 trillion dong to stabilize the market. Commercial banks committed to participate into the Market Price Stabilization Program for 2014 and 2015 Lunar New Year, including Agribank, Eximbank, Sacombank, VITV, VietinBank, among others. The banks will fund food producers and fruit suppliers, a total of 8.3 trillion dong, or $3.93 million this year, jumping more than 4 times versus a year back of 1.98 trillion dong. Short-term loans will enjoy interest rates of 5.5 to 6%, while medium and long-term loans will enjoy interest rate of 7 to 8%. And coming up next is some major macroeconomic and investment news. The Russian Foreign Minister Sergei Lavrov started his 2-day visit to Vietnam on April the 16th. At talks with Vietnamese counterpart Phạm Bình Minh in Hanoi, he said Vietnam and Russia are developing active cooperation, spreading on new spheres. In his words, Mr. Lavrov affirmed Russia hopes to consider progress of fulfilling the agreements reached by the leaders of the two countries during Russian President Vladimir Putin's official visit to Hanoi in November 2013. For his part, the Vietnamese Foreign Minister noted the Russian Foreign Minister visit to Vietnam is a good opportunity to discuss all aspects of the two countries' strategic cooperation in new spheres. However, special attention will be paid to major projects in the oil, gas and energy sectors.
Hợp tác trong các lĩnh vực, đặc biệt là lĩnh vực dầu khí, năng lượng giữa Việt Nam và Nga đã thu được nhiều kết quả quan trọng, hiệu quả, đem lại nguồn thu lớn và ổn định cho ngân sách của hai nước. Hợp tác trong các lĩnh vực an ninh quốc phòng, văn hóa, giáo dục, đào tạo, du lịch, thể thao đều đạt kết quả ấn tượng.
The minister will consider ways of expanding inter-ministerial cooperation for contributing to effective development between the two countries. Talking on Itatas on April the 14th, the Russian Deputy Economy Minister, Mr. Alexei Likhachev, said Vietnam-Russia bilateral trade enjoyed a 3 times higher rate than the world's average, reaching $4 billion in 2013. He said leaders of both sides agreed to raise the two-way trade to $5 billion in 2014. At the conference on avoiding the middle income trap in Vietnam in Hanoi on April the 15th, most economists agree this can be done via radical changes to the country's economic policies. At the conference, economists said Vietnam's lagging behind regional countries in terms of labor capacity, which is the main reason for its high risk of falling in the middle income trap. Some even said the country had already been trapped. Middle income trap is a phenomenon in which an economy quickly loses its steam for development or becomes stagnant after achieving the middle income level. Vietnam belonged to the second case, as it was listed among middle-income economy in 2010, with the average per capita income of $1,068, rising to $1,960 in 2013. The main reason is the lack of a real market-oriented economy in Vietnam. Achieving a higher growth rate is the only way to avoid the trap. Economists all agree, without radical changes to its management policies, Vietnam's economy will show no improvements. The Vietnam Asset Management Company made an unexpected move when adjusting down the annual rate for its purchased bad debt to 10.7% for Vietnamese dong, 5.2% for USD, and 5.7% for Euro loans. The rate will be applied for non-performing loans that the economy decided to cut the rate for them in the second quarter of 2014. The move follows Circular 19 of the State Bank of Vietnam, requiring the VAMC to consider lowering rate for purchased debt to a reasonable level. It must suit the payment ability of borrowers, the market rate, and the deals with customers. The rate is supposed to be publicized by the company on quarterly basis. Mr. Nguyễn Quốc Hưng, Vice Chairman of the VAMC, said the company and banks have revised more than 300 trillion dong of bad debts so far this year. The merger and acquisition activities seem to have boomed in Vietnam's banking sector in 2014, as at least 3 banks have announced plans to merge so far this year. Late last week, Petrolimex Bank, or BG Bank, 40% owned by Vietnam's top fuel importer and distributor Petrolimex, drafted a plan to merge with VITV Bank, the country's second-largest bank by assets. Earlier this year, Sacombank, the country's 9th largest bank by assets, announced a plan to acquire Southern Bank, thereby becoming Vietnam's 5th largest lender by assets. Meanwhile, Maritime Bank is set to acquire the Mekong Development Bank. The two acquisitions have already been approved in principle by the State Bank. Vietnam's banking system, affected by high levels of non-performing loans and cross-ownership, has undergone reforms and restructuring since 2011 to increase financial capacity and reduce bad debt since 2011. During the period, the central bank has called for takeovers and restructuring at weak banks. The International Finance Corporation, or IFC, a member of the World Bank Group, announced the 2012 scorecard of top 100 listed companies in Vietnam on April the 14th in Hanoi. Results show their management capacity and quality weakened. Top 100 listed firms surveyed by IFC represented more than 80% of the capitalized value of Vietnam's stock market. No Vietnamese companies gained satisfactory results, as their scores were all below 60, and the average score was 42%. The lowest level among 7 emerging markets surveyed by the IFC, including China at 40%, India 51%, Thailand 53%, and Malaysia 54%. IFC Corporate Governance Scorecard is among fundamental tools for international investors in seeking their targets. Therefore, the low results should seriously affect the FDI inflow into Vietnam in 2014.
And they are transparent about the challenges and decisions they make, or the challenges they face and the decisions they make. And an investor then gets a better view of one of the people who run the company, if they can trust them, and then of the results, which must have a high level of integrity, so they know they can rely when they receive a financial report from the company, they know it's reliable.
The IFC proposes 3 recommendations for business management improvement. First, lawmakers in Vietnam should complete the legal documents on corporate governance to ensure information transparency. Secondly, firms should have their management department to make financial report of international standards. The responsibility to and fair treatment to shareholders, especially minor ones, must be ensured. And finally, risk management should be taken care of.
On April the 17th in Hanoi, in the framework of Vietnam Expo 2014, the Ministry of Industry and Trade organized the Vietnam Export Promotion Forum 2014 with the theme of promoting exports, integrating into ASEAN Economic Community. The Vietnam Export Promotion Forum 2014 is organized to provide Vietnam businesses with the most updated news to export commodities to ASEAN countries in 2014 and catch up with the new development in the market when the ASEAN Economic Community is formed. According to Mr. Đỗ Thắng Hải, Deputy Minister of Industry and Trade, the benefits of the global economic integration in general and more intensive integration into ASEAN in particular doesn't only depend on the direction of the government, but the decisive factor is the active participation of the business community. Other forum speakers who are leaders of state agencies in trade sector and economic experts gave deep analysis and assessments about the bilateral trade between Vietnam and ASEAN in the past time. Basing on that, there are discussions and forecasts about the export outlook of Vietnam to ASEAN market in the coming time, and recommendations for Vietnamese firms to increase their export capacity to target market in ASEAN. Also, to have Vietnam firms understand more about the opportunities and challenges when doing business in ASEAN countries. After Vietnam joined AEC, the forum gave them the updated information about the progress in building AEC, the preparation of governments and businesses in other ASEAN members to join AEC, and especially deep analysis about the effects on the exports of Vietnamese firms in the coming time.
And now for trade news, we continue the program. The General Customs said Vietnam posted a trade deficit of $196 million in March, lower than an initial government estimate of $300 million. Exports last month were $12.28 billion, up 29.3% from February, while imports rose 24.2% on month to $12.47 billion. Vietnam were estimated to have run a trade surplus of more than $1.08 billion in the first quarter of this year. It received $33.54 billion worth of goods, making a year-on-year increase of 14.8%. Meanwhile, the country spent a total of $32.45 billion to import goods and services, making a year-on-year rise of 12.8%. Of note, the FDI sector continued playing important roles in the country's import-export turnovers in the period, received $20.74 billion worth of goods, accounting for 61.8% of the country's total export value in the period. It also spent $18.86 billion to import goods, accounting for 58.1% of the country's import values. Vietnam's imported a total of 10,377 complete built unit or CBU vehicles worth $188 million in the first quarter of this year, making a year-on-year rise of 50% in quantity and 54% in value. Increase in the imports of CBU vehicles also brought additional duty collections of $6.9 million. Of the sum, less than not-seat vehicles were estimated at 5,300 pieces, up 37% in volume and up 80% in value, as many luxury cars have been imported. Imports of cast spare parts were estimated at $385 million in the period, up 31% on year. The rise in the import of CBU cars has pressured the domestic auto industry, as under the commitments of the Free Trade Agreement, by 2018, import duty for cars will be 0%.
According to the Vietnam Coffee Cocoa Association, exports of coffee are expected to flourish in the second quarter of this year. In 2013-2014 crop, Vietnam's coffee exports are expected to surpass 1.5 million tons, worth $3 billion, making a year-on-year increase of 20%. The coffee exports are estimated at 700,000 tons since the beginning of the crop, accounting for 40% of the expected volume for the whole season, including 200,000 tons shipped in the end of 2013 and 500,000 tons shipped in the first quarter of this year. Average coffee export prices are $2,000 to $2,200 per ton. This is the first time coffee exports reported high increase in the first quarter of the year. Normally, in previous years, coffee prices declined by the end of March due to rain, but this year in April, the coffee prices are still high.
The Trans-Pacific Partnership or TPP agreement and other free trade agreements, which Vietnam is currently negotiating, is expected to bring opportunities for breakthrough economic growth in the country. However, while domestic businesses are not really ready, a large number of foreign firms have quickly invested into Vietnam to enjoy benefits from those agreements, especially companies in the garment and textile sector.
This is a German company which specializes in producing needles for the garment sector. For the first time, this company has participated in the Saigon Tex Exhibition 2014, recently organized in Ho Chi Minh City. The reason for their participation is that the company sees the huge potentials to develop market in Vietnam.
Okay, so from our company point of view, from a goods backup perspective, I can say that we see a very big potential in Vietnam. So we, let's say, extended our office. We have now a big team to supply to this country. We sell directly to all customers here. So we foresee that in the next couple of years, the industry will get bigger, first of all, and the quality will improve as well. So more fabric will be produced in this country. So we are preparing for that. So we are looking for the customers to sell our product directly to them.
From our observation, this exhibition witnesses a sharp increase in the number of foreign participants. Data from organizers shows the number of registered firms went up 40% compared to the previous one, of which most of the companies are foreign ones, such as those from China, Hong Kong, India, Thailand, Italy, or Korea. Their display products are mostly machinery and accessories for the garment and textile sector, which are the weaknesses of the domestic firms.
I think why the Chinese is much more than the past is because the aggressiveness of doing business with the Chinese. The Chinese is very aggressive in pushing their product worldwide. This is a good example the Vietnamese should follow. They should also go to the worldwide market to push their products. And the European, actually they come, but they came through the representative in Vietnam. See, when you go to see the Hall 3 and Hall 2, they are all European and Japanese product, but they use the trademark on the brand name of the Vietnamese. I would say European, Japan, and Korea still have at least over 2/3 of the market, and Chinese only have about 1/3.
Obviously, foreign firms in the garment sector are actively investing in Vietnam to enjoy benefits from free trade agreements. For example, in Nam Định province, in less than 1 month, many foreign fiber producers and garment firms have come to build factories. Or in Ho Chi Minh City, in the first 3 months of 2014, foreign investments was up 97% on year, of which investment in high-ranking garment and textile sector accounted for 85% of the total capital. Meanwhile, most of domestic firms are majoring in garment and not good at fiber producing, weaving, and dyeing. It means that when TPP comes into effect, it's difficult for domestic firms to enjoy benefits. According to the General Customs in 2013, Vietnam's garment and textile exports hit nearly $18 billion, up 19% on year, of which the exports of foreign firms reached 60%. Experts say the growth rate of the domestic businesses is just 8 to 10%, while that of the foreign ones are 30%. Therefore, relevant agencies and the leaders of the sector need to find solutions for the comprehensive development of the sector without depending heavily on FDI firms.
Destructive deaths, particularly those related to real estate, have been an obstacle to Vietnam's economic development in the past years. On this issue, VITV reporter had a talk with Mr. Astorji, the managing director of Cushman & Wakefield. He provides us a more comprehensive view of Vietnam's non-performing loan ratio, the current problems in the retail market, as well as the market recovery trend in the coming time. More to follow.
Thank you, Mr. Astorji, Executive Managing Director of Cushman Wakefield Southeast Asia, to join us today. We have a few questions for you relating the real estate market in Vietnam. According to Vietnam Asset Management Company, 67% of non-performing loan (NPL) belonging to real estate. How would you assess this number? Have any other neighboring countries like Cambodia, Laos or Myanmar encountered the NPL rate like Vietnam?
Firstly, the 67%, that number seems about right. Nobody has seen the list, but we hear that the number is anywhere from 65 to 70%. So your guesstimate is pretty good. That's what we hear as well. The whole concept of VAMC, I think, is a great initiative by the government to make sure that the non-performing loans come out of the books of the banks and get flushed out of the system at some point in time. And I think that will help kickstart the economy.
What are the main sectors contributing to this NPL and what are existing problems that the local market have to resolve?
So if you look at, from what we hear about the NPLs, the primary constituents of the non-performing loans within the real estate sector tend to be primarily in residential. They're all over across all asset classes, offices, retail and residential, but the largest chunk is of course residential, between the $1,000 to $2,000 per square meter range, which is the bulk of the middle income group of the housing sector. So that's the biggest constituent of the non-performing loans.
Recently, Vietnam market welcomes a number of support like interest rate lowering, 30 trillion aid package, 50 trillion bank package. How would the market be developed given such favorable conditions?
So there are a couple of things happening. One is the external stimulus and the other is the internal stimulus. Certainly from the external stimulus side, the fact that interest rates have come down is helping build investor confidence. So if you saw 12 months ago or 18 months ago, interest rates were at 24-25%. Now they've come down to about 11 to 12%. So that, of course, makes home buying more conducive. They could certainly come down lower, but it's at reasonably healthy levels already today. That is good. The government's initiative to pump in trillions of dollars, 30 million aid package and the 50 trillion aid package is a good initiative. However, I would caution that it needs to go into the right projects and projects that are feasible. And by that I mean, this aid should be going to those projects which ultimately the recipients, the developers that do receive this capital have the ability then to exit, to sell the residential units in the marketplace. And therefore their expectations of exit needs to be correct.
As one of the leading real estate service providers in Vietnam, what are Cushman & Wakefield's plan to approach the market, especially the three main cities, Ho Chi Minh, Hanoi and Da Nang, under this downturn?
So we've been here 7 years, and I don't view certainly this year and last year as a downturn. I think we've certainly come out of the downturn, and there's a lot of positive momentum that's getting built in our business and certainly in the rest of the industry as well. Our industry is growing. Our company is growing in both cities, Ho Chi Minh and Hanoi, and we've been hiring across all of our service lines. So if you look at our service lines, they're focused towards the two real estate groups, occupiers and investors. So our group here has the ability to reach out to professionals across the world and bring in the best planning, the best consulting, the best structures possible, and advise developers to build world-class malls or office complexes or residential complexes, advising them across asset classes. So I'm very bullish about Cushman & Wakefield here in Vietnam.
Okay. Thank you again, Mr. Ash Georgie, Executive Managing Director of Cushman & Wakefield Southeast Asia, for this very interesting conversation.
As usual, the final part is the summary of the local securities market in the week. Well, that's all for now. Thank you so much for your attention. For comments and feedback, you can reach us via email at intovietnam@vitv.vn or give us a call at 0422208288. Goodbye for now.